All right, so let's get started with today's webinar. This is the final webinar in the 3-day blitz. So we're finally getting to like the best stuff, I guess. Well, yeah, it is the best stuff. It's not really the best stuff, but it's about using what we learned in the first webinar and the second webinar together to actually take the trades. But this is actually one of the easiest parts. Taking the trades is not hard. It's finding the trades that's hard. So in today's webinar, we're going to be looking at taking trades using candlestick analysis and support resistance. We're also going to be looking at calculating stops and targets and entries. So, that's the important stuff: stops, targets, entries. You need to be able to calculate them and, know where you want to enter the trade, where you want to place your stop and all that kind of stuff. That's all vital. And we use price action to determine our stops, targets, and entries. And I'm going to explain that too. We're going to be looking a little bit at trade management. There's not going to be any kind of slides on trade management. The trade management part is going to be kind of like, I'm going to look at recent trades from the last few weeks, trades from this year and from the last few weeks, and we'll look at trade management through those trades, and I'll explain how those trades were managed, why some people exited early, because some people in the forum did in fact exit early, so we'll look at why some people exited early and why they probably shouldn't have exited early, in my opinion. But at the end, how you manage your trades is personal to you. So anyway, getting off track a little bit. I know I told you guys I'm going to disable the chat, but what I'm going to do instead is try my best to just ignore the chat and not disable it. Because the reason I like keeping the chat open, other than, the obvious interaction between me and you guys together, is that if my audio cuts out, if there's any issues, then people in the chat will be like, Nick, your audio cut out. It's happened before. And if I have the chat disabled, then people won't be able to tell me that there's an audio issue or that my screen's frozen or stuff like that. So I'm just going to try my best to ignore any questions there. So anyway, let's keep going. So yeah, today we're going to be discussing taking trades. About questions, please keep questions until the end. I'm going to allow anywhere between 20 minutes and an hour at the end for questions. Depends how long it takes us to get through the main stuff. So please leave questions till the end. Can someone tell Fabrizio if he can't hear, he just needs to refresh and make sure that his sound's on and all that stuff? Can someone please type that to him? So yeah, please leave questions until the end. I'll say when I'm going to be answering questions, please leave questions until the end. So before we get started, the obligatory who am I? Now, I know 95% of you already know who I am, but I am going to say it anyway. I'm going to let you guys know anyway, because there's going to be some new guys here that don't know me, and I feel that it's important for them to know my trading background and just some basics. It's not because I love talking about myself, it's because, just everyone should know who they're listening to in this webinar. So I'm Nick Bencino, started trading at the age of 16 in around about 2003. I started with the stock market as a school project in my economics class. I started trading Forex specifically, so it was stocks for the first 2 years. Then I started trading Forex specifically at the age of 18. I'm a price action trader. I don't use any indicators at all. That means my charts are clean, so I just use price action. I just use support resistance areas, which are price action based, and candlestick analysis. So those are the two things we've already covered. That's all I use on my charts. My charts are clean. I don't use trend lines. I don't use pivot points. I don't use Fibonacci. I don't use moving averages, no indicators, nothing like that. Just pure price action. I developed this strategy myself, when I was 18. It was like 2005. There weren't many websites online teaching trading. Well, I was young. I was like 18. I didn't have much money. I couldn't really afford books and all that kind of stuff, because trading books are expensive. And even if I could afford some, like let's say I could buy 5 or 6 books, it was hard to track down books because, we didn't have Amazon in Australia in 2005. I don't even know if Amazon exists in Australia now. So you'd have to go to a bookstore and look for some obscure trading book. I developed my strategy myself is my point. I developed it by looking at charts and by learning how to trade. That's how I developed my strategy. I noticed patterns and I noticed price would bounce from specific areas. That's how I developed support resistance areas. I didn't really know at the time that not everyone, but a lot of people use support resistance areas. But, that's how I developed them. And, my support resistance areas are somewhat unique compared to other people's, but essentially support resistance areas, they all have the same goal. Anyway, so I developed my own strategy. One thing that I've mentioned in the last two webinars, and I just want to quickly go over now, trading psychology. I consider myself very good at two things in Forex. I consider myself very good at price action trading. I consider myself very good at trading psychology. I'm okay, I guess above average, just because I've been doing it for years at money management and risk management. I'm pretty good, I guess, at risk management, but not very good. I know people who are better at risk management and money management than me, but trading psychology is definitely one of my strengths. As such, I'm going to be releasing a trading psychology podcast. So in this podcast, I'm going to be going over trading psychology. I'm going to be explaining a lot about, trading psychology, its importance, because it's one of the most important parts of trading. And I'm going to be trying to teach you guys how to master your trading psychology. This podcast, I'm going to be releasing it in a few weeks. It's going to be completely free, and it being a podcast, there's no video, it's just audio. So you can listen to it wherever you are, if you're driving, if you're out for a run, if you're cleaning the house, all that kind of stuff. I listen to podcasts for 50% of my day. Whenever I'm doing stuff, I'm listening to a podcast or another. Anyway, so let's get started with the actual content of the webinar. Let's get started with the actual real stuff that we're here to discuss. So in today's webinar, we're going to start finding trades, and I'm going to reveal my step-by-step process for finding trades. Now, pay close attention here, because this is very, very difficult stuff. My step-by-step process for finding trades, it's quite complicated. It's very, very, very tough. It's coming up in a second. Here it is. All right, I lied. It's pretty easy. Finding trades is easy. You already know how to do it, because that's what we discussed in the last two webinars. We discussed how to find trades. Finding trades is pretty much the easiest part. It's not difficult at all. It's very, very easy. Finding the actual setups, finding the setups. I'm not talking about trading them. I'm talking about just finding the setups is easy. These are the setups here. We've done this yesterday. So, and I spent a lot of time yesterday explaining exactly why I consider that a setup and exactly why I consider that a setup. And I took you through real examples from the last few weeks. So you guys should already understand how to find setups. It's as easy as placing support resistance areas and looking for indecision on your support and resistance areas. Now, I'm not saying that trading Forex is easy. I'm just saying finding these setups is easy. This is the easy part. So basically, you place your support resistance areas on your chart, which I've already showed you how to do. Those are the support resistance areas. And these, again, are real trades. Two of these trades were traded. This one wasn't, but two of these trades on this chart were actually traded. This is an AUD-JPY chart. These are trades that we're going to be looking at. So you place your support resistance areas, and you look for indecision on top of your support resistance areas, like these here. And this one here is a long trade. So, finding the trades is the easy part. You already know how to do that. It's simple. Okay. Oh no, I have to. Why isn't the slide changing? Oh, there it goes. All right, so what's the next step? After you find your trade, your first step is to calculate your stop loss. Calculating your stop loss is one of the most important things in Forex trading. You need to calculate your stop loss. And to calculate your stop loss, it's kind of easy to do, really. The first rule pretty much is that your stop must be in an area in which price cannot easily reach. Now, why is that? It's because you don't want price to easily hit your stop loss. It's pretty simple. So you place your stop loss in an area in which price cannot easily reach. And to do that, It's pretty simple. Your stop just must be beyond the most recent high or low. And this is vital. If price has pushed into an area recently, it's easy for price to do the same again. And by recently, I mean the last 3 or 4 candles on the time frame in which you are trading. So, why do I say this, and why do we do this? It again is very simple. We're entering trades based on price action. We're entering trades based on reading and analyzing price. And when we read and analyze price, in this case here, this example here, we see a bullish candle, we see another bullish candle. So we know there's a strong bullish preceding trend. We see indecision forming on top of an area of resistance. So what we're seeing here, step by step, is buyers had the strength to push up to here, but then they stalled. And this candle formed right here on top of this resistance area. So if buyers were able to push up to here, now I can't remember what time frame this chart is, but let's just say it's a 4-hour chart. If buyers were able to push up to here like 4, 6, 8 hours ago, what's to stop them from doing it again pretty easily? They've already pushed up to this high. They've already pushed up to this high, less than a candle ago. Well, no, sorry, just over a candle ago, because you would be opening the trade on the next candle. So buyers have pushed up to this high very, very recently. What's to stop them from doing it again? There's nothing to stop them from doing it again. So that's why you want to try and place your stop loss above the most recent high. You want to place your stop loss above one of the most recent highs. And if you're entering a long trade, obviously, if this was reversed and you were entering a long reversal, you'd want it beyond the most recent low. But in this case, it's a short trade, so you want it beyond the most recent high. So the reason for doing that is because price has been able to easily reach this point in the very recent past. So I want my stop loss beyond that point. I want my stop loss in a spot in which buyers are going to struggle to reach. So if I place my stop loss here, buyers have a few hurdles to break through. First, they have to break through this kind of area of resistance. So resistance is roughly through here. They need to break through resistance. They also need to make a new high beyond the indecision candle itself. So that's also somewhat significant. They then need to break the high of this candle and push above it. So your stop loss should be above this red line. So not exactly at the high, but above the high by a few pips, 3, 4, 5 pips. The higher your stop loss, the less likely it is to get hit. But also the higher your stop loss, the more you stand to lose if you lose the trade. So we're going to look at stop losses on real trades. This is why I place my stop loss the way I do. Wait, let me switch. All right, cool. So again, this is just another trade example, but it's the same thing. Your stop loss needs to be above one of the most recent highs. So again, here, most recent high is on the indecision candle itself. It's not the previous candle. So the most recent high is here. So you just want your stop above that most recent high. And again, it's for the complete same reason. We want to ensure that buyers don't have an easy way to hit our stop loss. Because if we were to place our stop loss here, for example, buyers have just broken through there in this candle. So it's going to be very easy for them to just pop up. Even if buyers just gain a momentary little bit of strength, just a little bit, it's going to be so easy for them to push up to here and take out our stop loss. And we don't want that. We want our stop loss protected. We want it behind a barrier. So in this case, behind this resistance area is a nice little barrier. And beyond the high of the previous candle is another barrier. So we want it like 4 or 5 pips above that. Okay. So that's stop losses. The key is to just ensure your stop loss cannot be easily hit. That's what you're aiming for here. That's what you do with stop losses. You just want to make sure that it cannot be easily hit. And essentially, we want to make buyers work to hit our stop loss. If we're taking a short trade, which would be the setup here, if we're taking a short trade, we want buyers to work hard to hit our stop loss. We don't want them to just be like, oh yeah, we got a little bit of strength. We're just going to push up here, take out this stop loss, and then we're going to continue down, and this trade would have been profitable. So we want buyers to work to hit the stop loss. Stop loss placement is your first thing, because your stop loss placement dictates whether or not you can take the trade. if your stop loss has to be way too high, so like, actually, let's go back to this example. So let's say the wick of this candle, instead of being here, was all the way up here. So it had a super long wick. Then your stop loss would need to be up there, which would make the stop loss way too large and would make this untradeable. So stop loss placement is your first step, because when you place your stop loss, it kind of dictates whether the trade is even worth taking. Okay, so let's move on to targets. So step 2 is to calculate your target. And this is where a lot of people are probably going to say, really? You want your target has to be double your stop loss at a minimum? Now, this is something I've started doing this year and towards the end of last year. And I've done it by... The reason I've done this is because I look back on all my trades from last year and I figured out that I would have been way more profitable, had my target always been double my stop loss. And it's proven to be correct this year. My target is always double my stop loss. And I think that's the way everyone should trade. I think that's the most effective way to trade this strategy, and pretty much every strategy really, as long as you're winning more than you're losing. But anyway, we'll cover that more in a minute. Let's just talk about calculating your target. So your target should be double your stop loss at a minimum. The other thing that's important with targets is that your target needs to be above the next area of support if you're going short, or below the next area of resistance if you're going long. So this is the area of support here. It's just the support resistance area that we've placed on the chart. This is the area of resistance here. So your stop loss needs to be above, this green line here needs to be above the area of support. The reason you want your stop loss above the area of support is kind of obvious, really. This area of support represents buyers. There are buyers in this area of support, and buyers, what do buyers want to do? We discussed this in yesterday's webinar. What's in a buyer's nature? It's in a buyer's nature to buy. Buyers want to buy. They want to push price up all the time. So we know there are buyers grouped in this area. We know there are buyers here. When we enter trade, when we want to go short, we want to make sure that buyers aren't able to turn that trade around very easily. So that's why my target is usually above, or maybe, but I try not to, just like a little bit inside that support area. If it has to be, if my target has to be a little bit inside the support area, just so I can get double my stop loss in the target size, I might do that, but not too deep into that support area, because this support area represents buyers. And the last thing you want to do when you're in a short trade, when you're selling, is try and counter aggressive buyers. Now, this is how I do things, and it's proven for me to be a lot more profitable to take your targets before major support areas. You can also, if you want to, take 50% of your target, so half, close out half your trade at the support area, then move your stop loss to your entry, and then continue, keep the trade open and try and see if price breaks the support area and moves down to the next support area. That's also possible if you want to do that. I have nothing against doing that, but at the very least, your first target or your whole target should be just above the support area. That's important, and it's, yeah, pretty much vital. And with this example that we're looking at again, we see the target is just above the support area. And the key here, the key thing to remember, is your target needs to be in a place that's easily reached. That's all it is. You want it to be easy. If you're taking a short, you want it to be easy for sellers to hit your target. And you want it to be hard for buyers to hit your stop loss. So it's really that simple. It's like when you place a stop loss, you don't want your stop loss to be easily hit. And when you place a target, you don't want your target to be very hard to hit. So we're just using price action to determine a target that's easily hit and a stop loss that's hard to hit. You know, very, very straightforward, very, very simple stuff. Please keep questions until the end, guys. So yeah, single targets are the way I do things now for the most part, but I am willing, as long as my first target is double my stop loss, as long as my first target's double my stop loss, I am willing to close out half my position here. But it's not something I would often do because it does mess around with your risk to reward ratio, and it could put your risk to reward ratio a lot lower. So 99% of my trades from now on are going to be single target trades. I'm just going to have one target, one stop loss, and that target's always going to be a bare minimum of double my stop loss. That's a minimum. Could be more, but the minimum is double my stop loss. So yeah. Anything else we need to discuss about targets? I'm just quickly reading over a few notes I have. No, that's it. Just getting on. Did I miss anything important? You missed the most important stuff in this entire webinar, sadly. No, I'm just kidding. Well, actually, you did miss some important stuff, but don't worry. There's a recording. It's all good. You could catch up on the recording. Okay, so... Oh, yeah, I was wondering why that wasn't. So, I just wanted to quickly explain why. Oh yeah, that's another cool thing about this webinar software. Because it's being streamed live to YouTube, and YouTube has this rewind feature, you can rewind and start this webinar from the start while it continues live. It'll just end for you 30 minutes after it ends for everyone else. So you can rewind if you want. Anyway, so reasons to maintain a risk to reward ratio of 1 to 2. So that's what I was trying to say earlier. My target is double my stop loss. So my risk reward ratio is 1 to 2. My risk is 1, my reward is 2. Risk reward ratio 1 to 2. That's what I'm trying to aim for. And that's a minimum. My risk to reward ratio is 1 to 2 as a bare minimum. So some of the reasons to maintain a risk reward ratio of 1 to 2, because before I used to do anywhere above 1, so my risk to reward ratio was 1 to 1 or higher, but now I'm doing 1 to 2 or higher. Reasons to maintain a risk reward ratio, reasons to maintain a 1 to 2 ratio, let's just say. So it's much easier to be profitable. I'm going to explain why in a second it's much easier to be profitable. 2, there's less stress when you take a loss because losses won't matter as much anymore. If you're losing, it's pretty simple. Losses aren't going to matter as much anymore because you're losing less and you're winning more. If you win, let's say 10 trades and you're winning $2,000 per trade, you're up 20,000. Then you take 10 losses, you've lost 10,000 because 1 to 2, and you're still profitable by 10,000. It's less stress when you take a loss because a loss is worth only half your wins. So that's a good thing. You can easily sustain a losing streak. So if you're in a losing streak, you can sustain your losing streak a lot better. It's easier to sustain losing streaks. Let's say you have a 7-trade losing streak. As your wins have built a buffer, 5 wins, for example. So 5 wins. I should have wrote this down because it's easier to visualize if you've got the writing. But let's say you have 5 wins, right? And you're making $2,000 per win. That's $10,000. So you've made 10,000 in 5 wins. Then you have a losing streak of 10 trades. That's 10,000 in losses because your losses are only 1,000 each. So, that starts balancing out. Like 5 wins cover a 10 trade losing streak. 5 wins cover 10 losses. So you can sustain your account through losing streaks a lot better if you're maintaining a risk to reward ratio of 1 to 2 as a minimum. And also it promotes good trading habits. And when I say that, I mean that holding your trades for a while helps to kind of harden your trading psychology. Closing out at 1 to 1 can enforce bad habits like closing early out of fear and closing early out of greed because you want to lock in profits. Holding your trades for that 1 to 2, it starts to enforce good trading habits, and it gets you into a position where you start to recognize trends more, and you start to recognize when price is trending and when it might be smart to leave that trade open for beyond 1 to 2. So you can hit 1 to 3 or you can hit 1 to 4 risk to reward ratio. So it promotes good trading habits. It lets you kind of get more experience dealing with price trending while you're in a trade and the positives of that and identifying that and all that kind of good stuff. So reasons to maintain a 1 to 2 ratio. I'm just going to talk about this a little bit further based on the previous thing where I said it's much easier to be profitable. So let's look at why it's much easier to be profitable. So if you take 10 trades at a risk to reward ratio of 1 to 1, you win 70% of those trades, with each trade being worth 1,000. So you win 70%. You've won 7 trades, you've lost 3 trades. Because you've taken 10, you've won 7, you lost 3. So with your 7 wins, just gonna get the laser pointer. With your 7 wins, you've won $7,000 because 1,000 per win, but it's also 1,000 per loss. With your 3 losses, you've lost 3,000. So you're at 4,000. Your overall profit with a 70% win rate, your overall profit is 4,000. But let's look at a 1 to 2 risk to reward ratio. If you take 10 trades at 1 to 2 and you win 50% of trades, with wins being worth 2,000 and losses being worth 1,000, this is how it works out. So 5 wins at 2,000 per win is 10,000. And why am I picking 1,000? Because it's just a nice round number. I'm not saying that's how much I make per trade or that's how much you would make per trade. It's just a nice round number, so I'm picking 1,000. So yeah, you would make 2,000 per win. With 5 wins, that's 10,000. And 1,000 per loss. With 5 losses is 1,000, so that's 5,000. 10,000 minus 5,000 equals 5,000. So it is possible to be more profitable while losing more trades if your risk to reward ratio is 1 to 2. It's basic math. It's very simple. So my point is, this is one of the reasons to maintain a 1 to 2 risk to reward ratio. You want to make more on your wins than you want to lose on your losses. And even though I was still very profitable when I had a 1 to 1 risk to reward ratio, I'm going to be a lot more profitable with a 1 to 2 risk to reward ratio. And this does not mean that I'm thinking or planning on losing 50% of my trades this year. I'm still planning on winning 70% of my trades, and I still think I can do it. Maybe I won't be able to do it. Maybe I'll win 60%, but I'm still planning to win 70% of my trades. But if I do not win 70% of my trades, if I only win 50% of my trades, and again, this is not something I think is going to happen, but just say theoretically, if I only win 50% of my trades this year, I'm still going to make more profit than than last year, where I was winning 70% at a 1 to 1 ratio. So, this is a reason to maintain a 1 to 2 risk to reward ratio, because even if you lose more trades, you'll be making more profit than 1 to 1. And this is probably one of the biggest changes to my trading strategy. I used to go for 1 to 1 as a minimum, but now 1 to 2 is my bare minimum. And I try to go for more when I can. 1 to 2.5, 1 to 3 is also very acceptable. If the next, anyway, we'll look at that with some more examples. Yeah, I think that covers pretty much all of that. So let's quickly talk about calculating your entry. I just want to breeze through all this stuff because I want to move over to real examples, real trades. So let's just breeze through all this stuff. So calculating your entry should be at a new high or low, and this is usually the break of the indecision candle. So the indecision candle is what made it, what kind of made you see this as a setup. That's what's creating this setup, the indecision candle. A new low, in this case, a new low, beyond the low of this indecision candle would indicate that sellers have taken control of price. So if you're selling, a new low indicates that sellers have gained control. If you were buying, so if this was a long trade, a new high would indicate that buyers have taken control of price. Basically, the key here is just to confirm that a transition has occurred. So remember how yesterday we were talking about a transitionary period and how transitionary periods occur at areas of support or resistance. So this is an area of resistance here. We got indecision. So we kind of want to confirm that a transition of power has occurred, that power has transitioned from the buyers, which were in control here, then price went into the transitionary period. We want to confirm that price has been taken over by sellers. Sellers now have control. We just want to confirm that sellers have control. And okay, sorry, I was just reading the chat real quick. And when sellers take control of price, it's in this case you're confirming sellers have taken control of price when they break this low, when they make a new low. Now, you know, there are other scenarios, but we're going to look at this. We're going to look at this in more detail as we take a look at real trade examples, because real trade examples are where it's at, not these images. Why do people keep saying I read? I don't understand. Anyway, while you guys answer that question, let's quickly go over 3 of the most common questions I get asked about trading. Just because I feel like I'm going to get asked these questions 100 times, so I just want to kind of nip that in the bud and answer these questions. Are these setups, so reversal setups, the setups I just showed you, are these the only setups you trade? And the answer to that is no. I also use yeah, I'm going to disable chat. It's going to be easier because I keep getting distracted. All right. So are these the only setups you trade? No, I also use the same price action techniques to scalp 5-minute charts regularly. Scalping is something I started last year, and it was introduced by a student of mine who has gone on to become a successful trader in his own right. And he kind of started scalping 5-minute charts and posted a strategy to the forum for scalping 5-minute charts. I kind of took that strategy and sort of tweaked it for my own use. Not really that much, but I tweaked it for my own use, and now I trade 5-minute charts regularly. It's not a big part. It's not a big money maker. The bulk of my trading income still comes from my normal strategy, the one I'm sharing in this webinar. But there's also 5-minute chart trading that I do, and that some people in the forum do. This year, I'm also starting to trade continuations. I feel that current market conditions are great for continuations. Continuations are something I thought I might be able to discuss in this webinar, but there's been no time because, there just hasn't been enough time to discuss continuations. So, yeah, I haven't really discussed them, sorry. But, we could leave that for a future webinar maybe. Anyway, another common question. Do you hold over weekends? I know I'm going to get asked this question a lot. Do I hold trades over weekends? Sure, why not? I didn't used to, but now I do. I've started holding trades over weekends. What prompted the change? Basically, me not holding trades over weekends was something that I've been doing since 2008. And it's because in 2008, price was very, very volatile. Like some pairs were moving 10 times what they move today. Price was extremely volatile. You could look away from your charts and GBP/JPY could have moved 1,000 pips in an hour. I'm not kidding. That used to happen in 2008. 1,000 pips in an hour. It happened back then. So not holding trades over weekends was something that I started doing back then in 2008, because over a weekend you could, leave, then come back on Sunday and price could have gapped up 500 pips, which was very scary, which is something you don't want. But then I started thinking, why am I still doing this? It's 2016, that was 8 years ago, and we don't get gaps that size anymore. Holding over weekends is nowhere near as scary as it used to be. I can't remember when I last saw a gap that was over 100 pips. So, now I do hold over weekend. So, that's another change to my strategy from last year. And that's something you guys might want to start doing. And finally, what about news? Because this is one of the most common questions I get asked. Do you hold through news? What about news? What news keeps you out of the markets? Again, news is one of those things that I've been scared of since 2008, because in 2008, news could move price 500, 700, 800 pips in a few seconds. These days, news doesn't really do that anymore. Markets aren't as volatile. So more and more, I've started having, I've started fearing news less. I'm not as bothered by news reports. So these days, the only news reports that keep me out of trades are the NFP report, interest rate announcements, and speeches by central bank leaders or other VIPs. What do I mean by other VIPs? Like the President of the United States, prime ministers, stuff like that. That's the only news I care about. Other news, whatever. I don't care. I just trade through it. I just ignore most news releases because, I'm trading the 8-hour time frame most of the time, or the 12-hour, sometimes the 6-hour. These news reports that Forex Factory says are high impact, there may be high impact if you're trading the 1 hour. There may be high impact if you're trading 5-minute charts, but up on the 8-hour charts, they're not. They don't really bother me. They, sometimes every now and then a big surprise news release might come out and I might lose a trade, but big deal. I'm a big boy. I've been trading for years. If I lose a trade, it just goes into my losses column on the Excel spreadsheet. It's not a big deal. It's just sometimes you are going to lose trades due to news coming out a lot higher or a lot lower than expected. But if you start worrying about this, because it's such a rare event, if you start worrying about this and avoiding every trade because of news, you're going to end up taking one trade a month. I'd rather take 6, 7, 8, 10, 20 trades a month if I can. Well, not 20 trades, but anyway, I'd rather take a lot of trades per month and risk one of those trades being stopped out by news than limit myself to taking one trade a month and never trade near a news release. So most news releases, I don't care about them anymore. Only ones that bother me are NFP, interest rate announcements, and speeches. So, that is the third question answered. Now we're going to switch over to real charts, because real charts are where it's at. No point at all going through chart examples when we have plenty of real trades to show. All right, so we are going to take a look at some real charts. We're going to take a look at some real trades. We're going to take a look at stop losses and all that kind of stuff. So just give me a quick second. All right. These are all, sorry, not all. I don't think that's accurate, but these are almost all recent trades that I need to, sorry guys, I'm just having some trouble getting everything I want onto my screen. Like, my screen's just getting a little messy because I have so many windows open. Like, I have a PowerPoint for presentation. I have my charts and all that stuff. Just give me a second here to sort this. And now PowerPoint's frozen. That's great. Okay, whatever. Let's just leave PowerPoint there, frozen or no. Let's just Control delete it. There it goes. Cool. I'm sorry about that, guys. It was just getting hard to deal with. All the windows open and PowerPoint froze, and then I couldn't get it down. And now we're back in business. Now we got everything sorted. So yeah, we're going to look at some trade examples. I'm going to try focus on stop losses because I want to show you guys. Stop losses. It's one of the hardest things to master, the stop loss. So I want to show you guys some of that. I'm going to re-enable chat, I think, because at this point, it's good to have a bit of open discussion. So chat's re-enabled. Let's start. I'm going to start with this Euro USD example. Damn it. The red cross moved. We've lost the red cross. Has that happened everywhere? No, just on Euro USD. That's cool, then. That's good. All right, this example was on the 8-hour chart. Let me track it down real quick. I think I see it already. This is the actual example we were using on the slides I was showing you guys. And it was this example here. And I was saying that my stop loss and my target are a minimum of 1 to 2. So my target is always double my stop loss. So let's see what this would have done in this trade. So you're looking at this setup and what's happening here. You're reading the story of price. Remember the story of price that I was talking about yesterday? You're reading the story of price. You got this candle, this strong bullish candle. Buyers are taking control of price. They're pushing up. They hit this area of resistance and immediately they kind of stall. Next candle comes along and it's an indecision candle. You know, price gets stuck on this area of resistance and it looks like we have a trade set up here. So first thing you do when you're looking at this trade is you place your stop loss. So the stop loss, you don't place your stop loss. You look for the area in which you would place your stop loss. The stop loss would be up here because that's the most recent high. So we want to ensure that our stop loss is in a place that's hard to reach. Which is that. Okay. We want to ensure that our stop loss is in a place that's hard to reach. Close that to make the chart bigger. So our stop loss is going to be roughly here. It's just above this this wick here, just a few pips above it. Then we're going to try and figure out our target. Our target's going to be at the next area of support. This one here, right? And then we're going to look at setting our entry, which would be roughly here. The entry is going to be at the low of the indecision candle. When price breaks the low of this indecision candle, right, that indicates that price has made a new low and that sellers are starting to take control of price. Now, ideally, you want to place that just a few pips below the low of that indecision candle, which would have probably protected you from getting entered into this trade that would have been a failed trade. But let's look at the more important thing. With a stop loss up here, above this high, and with a target down here, what's our risk to reward ratio? It's 1.09. It's a risk to reward ratio of 1.09. And like I said, I want my risk to reward ratio to be 2. I want it to be 1 to 2. My risk to reward ratio needs to be 2. So this trade is half, almost just a little bit more than half what I would expect as a risk to reward ratio. I'm risking, let's say I'm risking 1,000 to earn 1,000. You know, so that's not worth it with this trade. This trade is just not worth it. I'm not sure if this trade would have been triggered had someone actually planned to enter it because it's a little bit below. It looks like it might have just been triggered and then stopped out, but it wasn't a trade that was worth entering. It was too risky. It wasn't worth the risk, and yeah, it ended up being a failed trade. Fabrizio, that's a good question. But we'll discuss that in a little bit. I just want to get through these examples. There's probably going to be an example that illustrates your question. Okay, so this would not have been a trade because it doesn't meet the requirements of a 1 to 2 risk reward ratio. So this would have been a trade that looks okay, but it just, you know, by the time price reaches this support area, it's only got about 1.09, 1.12, so it's not worth it. So what happens when you see a trade like this? You just say, screw it, I'm not going to enter. And, you know, a lot of people don't like that. They say to themselves, but I do. I want to enter the trade. I want to enter trades. But being a trader is not about entering every single opportunity. It's about entering the best trades. You know, you want to enter the best trades, the best trade setups. And if a trade setup doesn't meet your requirements, if it doesn't meet the requirements, you know, some logical requirements, then it's just not worth entering. It's better to skip a trade that's too risky than it is to enter it just because you want to be in a trade. You know, professional traders, they only enter trades where they think they have a good chance of winning, where the risk, you know, the risk is not too high, and this trade was just not worth entering. So it wasn't entered. It was just simply skipped. It was a skipped trade, and good thing that it was skipped because it was a failed trade. But that's not always going to be the case. Sometimes you're going to skip a trade, and where is this example? I actually can't see this example, but the point is that's not always going to happen. Sometimes you're going to skip a trade, and you skip that trade, and it might end up being profitable. So, you know, if that's the case, that's the case. You just have to deal with that. Okay, so let's look at this USD JPY example and see where the stop loss would go here. Because I like looking at these examples where the previous candle before the indecision candle, even though this is indecision also, this is the indecision candle, one of the indecision candles, and this is another indecision candle. So here we have 3 indecision candles in this trade here. So which one is the indecision candle we would use? For me, it just makes sense to use the biggest indecision candle there, which would be this one here. This is the indecision candle I would use in this trade example. I didn't actually take this trade. It's just a good example that I found that would illustrate this. So I thought I'd show it to you guys. I mostly like to show you trades that I actually took, or that at least one of my students took using my strategy, or that was posted to the forum. But when I saw this, I just thought this example illustrates something I want to explain, so I just picked it, even though it's not something I actually traded. But it is something I would have traded. I'm not sure why I didn't at the time, but it is something I would have traded. So with this example here, what do we have? What is the story of price with this example? We have a nice strong bullish preceding trend. We have buyers taking control of price. The first attempt buyers made to hit this resistance area, they turned around, they stalled. It was quite clear that buyers were stalling here. Then buyers pushed up again, they hit this resistance area, and they couldn't make a new high beyond the previous candle. So what's the story of price telling us? Buyers in control of price, buyers stalling at resistance, followed by indecision, so a nice strong indecision candle on this area of resistance. Then we have a weekend gap, and I'm fine to trade over the weekend gap, and we get 2 more indecision candles. So what do these candles tell us? Well, they tell us that price is still stuck on this area. They're just telling us that there's indecision on this area. Buyers and sellers are struggling for control of price. And, you know, by this candle here, sellers have taken control of price and they've started pushing down. So, you know, what would I do in a situation like this? There's 2 things. First thing would be to jump up a time frame. Jumping up a time frame is always nice because it condenses the candles, right? So we have 3 candles here. When you condense them by going up to the 12-hour, it appears as only kind of 1 candle. Well, no, I guess 2 candles because you include that one too. But this would be the focus candle. The entry and stop loss would still be the same. But this is still just, it kind of condenses it and it makes it easier to see is what I'm trying to say. I'm not sure about the daily with this one, to be honest. The daily condenses it even further. So you could do that. That's a nice handy little trick. Jumping around timeframes is important. I'm not sure what you mean, Stephen. Why isn't it just taking longer than expected? No. Okay. Anyway, so that's a handy little trick. Switching around different time frames, looking at different time frames to kind of get an idea of what price is doing is a handy little trick. All right. Okay. For anyone watching this as a recording on YouTube, I'm reading the chat because I believe it's important to have chat open when we're looking at specific trade examples. So if I keep pausing and stuff like that, it's just because I'm taking a quick look at the chat. So yeah, with this trade, I'm not sure if I would have taken this trade. It's hard to say, I would have taken the trade after the fact. When you look at it, right, because it looks like such a good trade, it's easy to say, yeah, I would have taken this trade. But, in the situation, I might have said, oh, no, I don't like that weekend gap. I mean, I don't mind trading weekend gaps these days, but I might have minded in this case. And I didn't see the specific price action moving. I didn't see price moving. So, I'm not 100% sure what I would have done in this setup, but let's just say theoretically I would have traded this setup just because it's a good example. And let's say I'm not switching around the timeframes and I'm looking at this purely on the 8-hour chart and there's free indecision candles. So if there's free indecision candles, which indecision candle do you use to determine your target and your stop loss? I just use the biggest one. So this would be my my entry, my stop loss would be up here, and my target would be down here. That's how how I would play this trade. Let's look at if this trade would have actually been a good trade to take. I'm not sure. Let's look at the risk to reward ratio on this one. Nah, it would have been 1.75. Maybe if you entered on a retrace, because see, this candle broke and then it retraced, so price pulled back up a little bit. That's also something I'm willing to do, entering on a retrace. If you entered on a retrace, you could have got 1 to 2. So it might have been worth it on a retrace. But yeah, it doesn't look like an ideal trade. It doesn't meet the 1 to 2 requirements of a risk to reward ratio. But it is a good example to illustrate what you would do if you have free indecision candles. If you have free indecision candles, or even 2, I usually go for the biggest one. And let's say, right, I couldn't find an example to illustrate this, but let's say the first one has a move down to here, like this one, but then this second one has the wick up here above. Then I would use both for the indecision candles. I would use the high of this one to determine my stop loss and the low of this one to determine my entry. What we're doing is we're always trying to make our stop losses and our stop losses hard to reach. So you're always essentially picking the highest point for your stop loss, the highest recent point, the most recent high, that's your stop loss. Above that is where your stop loss goes. And your entry is a place where you want to make sure sellers have taken control of price. So the entry would be down here. Anyway, we've wasted enough time on this trade that I didn't actually trade and that no one traded. I just thought it was a cool example, but let's look at some real trades. We're going to focus on stop losses just a little bit more with some more examples. And we're going to look at this one here. Yeah, we're looking at risk to reward right now. All right, so let's look a little more at stop losses. Oops. Again, we're looking at a trade I didn't take. We're doing this just because I want to illustrate stop losses, and this is a trade I didn't take for a reason. It wasn't taken because the stop loss wasn't right, and I think a few people in the course took this trade on a retrace, if I remember. No, that was another trade. Never mind. So this is a trade that was avoided because the stop loss was too large. And this one would have been a win, I have to say. And it kind of sucks. Sometimes you skip a trade that doesn't meet your requirements and it ends up being a profitable trade. But most times doing this keeps me out of bad trades. This time it would have got me into a good trade, but whatever. Sometimes it doesn't work out. So essentially what's happened here, we've got sellers pushing into an area of support. Bam, indecision forms. Stop loss goes below the low of the indecision candle. The reason it goes below the low of the indecision candle is because we don't want to give sellers easy access to our stop loss. Entry goes at the high of this candle because we want buyers to make a new high before we enter this trade, and target would be here. So let's take a quick look and see if this trade would have been viable, which it wouldn't have been viable because I've already said so, and it would have been 1.5 risk to reward ratio. So it wouldn't have been worth taking. It would have just been a bit too risky for my taste to take, because in order to get a safe stop loss, and we're using price action to decide where our stop loss is, in order to get a safe stop loss below this low, it's just going to make the stop loss too big. So in order to get a safe stop loss, we're going to have to put our stop loss too low, and it doesn't make the trade viable. So this is an example of a trade where it's been skipped because the stop loss was too large, but it ended up being profitable. But that's discipline that a trader has to have. You have to be disciplined, and you have to be willing to let trades go if they don't meet your requirements. As you saw in the first example with Euro USD, the stop loss being up here, the stop loss being too wide, prevented us from getting into this trade, and this trade would have been a failure. But yeah, in the AUD-JPY case, it would have been a profitable trade. But I'm just going to quickly read chart. All right, cool. I just wanted to quickly go through the thing. Anyway, so let's look at some real trading examples. I want to look at real trading examples, trades that have been taken in the past few days, in the past few weeks even, and maybe some earlier ones. We're going to go through a lot of trading examples. The reason I want to go through a lot of trading examples is because, I want to give you guys a very good idea and a very well-rounded idea of the kinds of trades that would be taken with this strategy. And the best way to do that is to go with trades that have actually been taken by either me or members of the advanced course. And to do that, we're going to look again at a lot of the trades we looked at yesterday. The reason we're going to do that is because yesterday I showed you why those trades were worth entering, but today I want to show you why those trades were actually, how those trades were actually traded after they were entered. So we're going to start with the New Zealand USD short that we talked about yesterday, posted on February 22nd. The reason this red bar is here is just to hide the URL of the forum because it's a private forum. Anyway, so let's go over to New Zealand USD. And this is the trade here. All right, so it was traded on the 8 hour. Yeah, it was cool. So this is the trade setup here. We talked about this trade setup yesterday, and we talked about kind of like the basic concept of why this was considered a setup. So we had buyers taking control of price, pushing up, buyers retaining control of price, buyers taking control of price, and then it hit our area of resistance. So it hit this pre-placed resistance area, and indecision formed. So when indecision formed here, and then we got a second indecision candle, it was quite clear what was happening here. Price was stalling, buyers were stalling at an area of resistance. And that made it so we we were looking at entering a trade here. So how was this trade entered? How was this trade handled? This is a short trade, so yeah. So first of all, the stop loss was decided to be around about here. The stop loss was just above the the high of the indecision candle. That's where the stop loss was decided. Target was decided to be around about here. So kind of like just at the top or just a little bit inside the area of support. And the entry was decided to be just a little bit below the indecision candle. Now, this is an interesting example because the indecision candle itself does not have a lower wick. You can see that there's no lower wick to the indecision candle. So what do you do in a case like that? You just place your entry a few pips below the indecision candle. Now, the reason we're doing that, the reason we're placing our entry just a few pips below the indecision candle, and the reason it was placed a few pips below the indecision candle with this specific trade, was because the break of that indecision candle indicated a new low, which is a good sign, which indicates sellers are taking control of price. But because there's no lower wick, and because making that new low is very easy for sellers because it's only a few pips from open, you want them to push down a little bit further. You want them to kind of push down 3 or 4 or 5 more pips just to confirm that sellers have actually taken control of price. So the entry was around about here. For some of the people who took this trade, it triggered on this first candle. For some others, it triggered on this second candle. And keep in mind that the forum, not everyone is using the exact same entries and stops. Some people have a stop just a tiny bit higher, entry a little bit lower, but it's roughly around about here. It just depends on the trader. So this is how this trade played out. It got triggered. It started moving down. Now, some people freaked out on this trade, and they freaked out at this point here. See, when price pushed down to here, and then it retraced up to here. So, on this candle, when price started pushing down a little bit, and then it retraced all the way back up to here, some people kind of got scared, and they closed out. Not many people, but some people did. And that's something that you need to learn to do. That's something that you need to learn to sort out with your trading psychology. You can't be scared with trades like this. You can't be scared when price kind of retraces a little bit, because it's all normal. And you have to keep in mind that you've got a resistance area up above you. So this resistance area, it's an area full of sellers. You've got a resistance area up above you that's protecting you from buyers coming in and just taking control of price and pushing price up. I mean, sometimes they are going to do that, but for the most part, this resistance area is protecting you. So if buyers are pushing back up and attempting to break through this resistance area, you shouldn't be too worried, because the resistance area is there, and that means that there's sellers there, and sellers have a strong chance of pushing back the buyers, which in this case they did. And it ended up dropping down and hitting target down here at the support area. I'm just going to quickly read the questions. Vishwa Kalra is saying, on a normal chart, you'll find many of these setups, most of them just form and pass away. The stop loss is hit. I really respect the trades being taught here, but it's just that there could have been better things done. I think you're ignoring one very important thing. The trades are only taken at areas of support resistance. So if a trade forms at an area of support resistance and our entry trigger is met, which would mean when we confirm sellers have taken control of price, or buyers if we're going long, the vast majority of those trades end up being profitable. So, when you're saying that, it sounds like you're thinking about indecision that forms kind of in between support resistance areas. Like here would be a good example. This is indecision that forms in between support resistance areas. This is not a viable trade. because it's not forming on top of a support resistance area, and it's very easy for sellers to continue moving down like they did. But if the trade is taken on an area of resistance like this one here, then it's a lot easier. It's a lot harder for buyers to continue pushing up because there's an area of resistance. It's protected by sellers. So it's protected by sellers here, area of resistance, indecision, protected by sellers. So actually, this is a very good example. So let's take a look at this one in a second. Actually, no, we can take a look at it right now because we've already covered this one. So let's take a look at this example. This is a good example to illustrate and to answer your concern. So with this setup here, right, we've got the same basic thing. We got buyers taking control of price, buyers pushing up, got buyers retaining control of price. They pushed up to the resistance area, they got turned around. So that in itself is a sign that this resistance area is quite strong. When buyers hit this resistance area, they immediately turned around and indecision formed. This would not be a viable trade. Number one, because the indecision is in between two resistance areas. Number two, if you were even to attempt to take this trade, you would run into support down here. So it would not have a valid risk to reward ratio. So this first indecision candle here is not a trade. It's completely useless. It's just indecision forming in the wild in between two support resistance areas. Then we got this bullish candle. So buyers took control of price again, and they came here and they made this high, right? So they made this high here. Now, after that, we get another indecision candle, but whereas that indecision candle formed in the middle of nowhere and it wasn't viable, this indecision candle is forming on top of an area of resistance. So this is when it's viable. This is when there's a viable trade setup. And with this one, stop loss would have went just above the high of this. So stop loss would have went roughly there, just above the high of that. Target would have been down here, kind of near the support area. And entry would have been just kind of at the low of indecision. I'm not sure if this was a trade that would have, it would have met the risk to reward ratio. So 1 to 2. Your entry could have even been lower, but there was no need for it. And what happened with this trade? What happened with this trade was buyers attempted to push up again, right? They attempted to push up and they made a strong move up. This could have been news-based. It was probably news-based. But see, this resistance area and placing the stop loss beyond the recent high would have probably saved you on this trade. There is a small chance, depending on the spread, that you might have been stopped out. There is a small chance of that, and that can happen sometimes. You have to accept that you're going to be stopped out, but more likely than not, the stop loss would have protected you on this trade, and that's as a result of resistance, because you're protected with the sellers grouped here, and because you're placing your stop beyond a recent high. If you were to place your stop any lower than that, you would have easily been stopped out by this trade. Even if you were to place it beyond the high of the indecision candle, the indecision candle being here, you would have been stopped out. That's why I always look to place it beyond the most recent high, the most recent high being this one here. I'm just reading the chat real quick. All right, cool. Yeah, that's something a lot of people don't understand in Forex, and a lot of people don't want to lose trades. But losing trades is just a normal part of trading. You have to accept that you're going to lose a trade. This year, my minimum goal is 60% wins. That's my minimum. I'm expecting 70% wins, but my minimum is 60% wins. So I'm expecting, as a minimum, to lose 4 trades out of every 10. Maximum? Minimum. I guess you would call it a maximum. My maximum losses, I'm expecting to be 4 out of every 10 trades. Maximum losses, 4 out of every 10 trades. I think that's the correct wording. So my maximum losses, I'm expecting 4 out of every 10 trades. What I'm shooting for is 3 out of every 10 trades to be losses. So I would have 7 wins out of every 10 trades. But let's say I get the maximum losses this year, which would be 4 out of 10, which would mean I have a 60% win rate. I would still be extremely profitable because I'm trading with a 1 to 2 risk to reward ratio. So that's why I do this with these trades. That's why if it doesn't meet my risk to reward ratio, I just skip it because it's not worth taking. And 1 to 2 is my minimum. If I can get 2.3, 2.4, 2.5, I'll go for that. So yeah, these examples have been covered. I use pending orders sometimes, I use limit orders sometimes, but most times I'll just use a market order. I'll just enter manually. It just depends. I mean, a lot of my students are using pending orders. It depends how you want to do it. Haroon is asking, Nick, what's your maximum pips when you're taking a stop loss? Sometimes to take trades if the wick is too short, but if a wick is too long, you don't take the trade. My maximum... There is no maximum pips when you take a stop loss. Your stop loss is determined by your percentage risk. If you're willing to risk 1% of your account size on a trade, then your stop loss needs to represent what 1% of your account would be. That's how you calculate your stop loss. Or that's how you calculate the size of your trade. It's kind of all interconnected. Trailing stops is something I don't use. Some of my students use trailing stops. I don't. I never found the need for them. Up to you. If you want to use trailing stops, feel free. Do you enter a trade immediately after an indecision candle is formed, or do you wait for more confirmation? Well, I've just been explaining that we wait for more confirmation. Confirmation is vital. You have to wait for confirmation. You can't enter a trade as soon as indecision forms, because indecision itself doesn't mean that sellers have taken... If you're looking at taking a short, indecision does not mean that sellers have taken control of price. Indecision means that price is undecided. That's what indecision is. It's indecision, undecided. Price is undecided. You want to have an entry trigger. Your entry trigger is a new low. So the low of the indecision candle, when that's broken, and maybe a few pips beyond that, that's your entry trigger, because that starts to indicate that sellers are now taking control of price. So the entry trigger would be this line here. Do you open multiple trades? I don't really see why that question's valid. I mean, that's something that is up to your own trading plan. I tend not to open multiple trades because I tend to go into a trade with my maximum risk for my account. So let's say, for example, I'm not saying these are actual numbers, but for example, if my maximum risk is 1%, I like to use my maximum risk on most trades. And if I've already used up my maximum risk and I enter another trade, that would be that I'm risking 2% of my account at one time. And that's just not smart trading, because if a big event happens and both those trades end up failing, you've lost 2% of your account. That's not how you want to trade. You're doubling your risk essentially if you're taking 2 trades at a time. But a lot of people, they do it a different way. Every trade they enter, they're risking half of what their maximum risk would be. So that always leaves the opportunity to take a second trade. It just depends how you want to do it. Entry trigger is below the wick of the candle, the low. In this case, because it's a short trade, it's a new low. That's what's important, the new low, not the body low, the new low. In the very same example, the high was breached of the long candle. Doesn't it scare you to be in that trade? The high was barely breached. It was breached by 1 pip in this example, and the stop loss was 2 pips beyond that. So why would you panic exit a trade that's only 2 pips away from being hit, when your stop loss is only 2 pips away from being hit? At that point, you may as well say, screw it, I'm going to stay in until my stop loss is hit, as opposed to panicking and exiting. Raymond, Nick, what percentage of your account do you risk per trade? I might have missed it before, but you said 2%. I most certainly did not say 2%. I said that these are theoretical numbers that I said that they're numbers, just example numbers. My risk is not important. My risk is my own, is how much I risk. How much you risk is up to you. I would suggest with a small account doing no more than 1% risk. All right. There's a lot of questions. A lot of them are kind of off subject and some of them are on subject, but I want to continue with some more examples. I want to look at some more examples, specifically the ones we covered yesterday. I want to look at some failed examples so I can show you guys some failed trades. So let's quickly go through these examples. That way we can see a whole variety of trades. So here we have another example on AUDJPY. This is something we talked about yesterday. This is another example we covered yesterday. So the reason we're going through this one is because I want to show you how this was actually traded. Yesterday we looked at this as spotting the setup, and today I want to show you how after spotting the setup itself was traded. So here is the trade itself. So you're reading the story of price like we were discussing yesterday. Buyers have control for this candle. Buyers have control for this candle. Buyers have control for this candle. It's a strong bullish preceding trend. Buyers have clear control. Buyers run into an area of resistance and price stalls. So price stalls at this area of resistance. We get an indecision candle forming. So quite clear indecision candle here. So what happens at when we get indecision candle forming? Well, after the indecision candle closes, when this candle closes, you take a look and you start planning a potential entry and target and stop loss, etc. So stop loss is going to be just a few pips above the high of the indecision candle. That is the most recent high. In the last few candles, it hasn't been any higher than that. So that's the most recent high. Target would be kind of like at this, the top part of this support area. So around about here, somewhere in this rough area. Entry would be a little bit below. You'd want it just a bit lower, just a few pips lower. This is another example of a trade. Oops, damn it. This is another example of a trade setup that. Let me move that. Yeah, this is another example of a trade setup where you want to have your entry just a touch lower. And the reason for that, the reason you want to have that just a little bit lower is because when this candle, I'm going to move this for a second to make it easier to see. When this candle here opens, right, and it starts dropping down, it only has to move down 1 or 2 pips to make a new low beyond this candle, beyond the indecision candle. So it's a bit easy for sellers to push down at this point. It's only 2 or 3 pips for them to make a new low. So, what I want to see is sellers making a bit more of an effort. So 3-4 pips below. So I just place my entry just a tiny bit lower. So my entry would go roughly here. My stop loss would go roughly here. And my target would be roughly kind of near the top part of this support area. So this one's perfectly 1 to 2. This one kind of just fits in almost perfectly 1 to 2. Could have also been extended a little bit because price, was dipping, moved down quite fast. But this is essentially the trade setup here. It's a very simple trade setup. It wasn't really that tough. And, you know, that's how this trade would have been handled. Stop loss would have went above the high of indecision. Entry would have went just below the low of indecision, and target would have been near to this next support area. That's pretty funny, Daniel. Daniel says, I'm surprised with all these off-topic questions. No one's asked Nick how much he can bench press yet. I actually can't bench press much. I haven't lifted in a long time. I'm actually starting again to lift because some of my friends have convinced me to. Anyway, enough about that. I want to take a look at a failed trade because we're quickly running out of time. So I want to take a very quick look at a failed trade. Failed trades are more important to look at. No, not you. Where was the failed trade? Euro AUD. Euro AUD. This one was posted to the forum by Tom. Where is the... Okay, that's not going to work. I'm just going to... Right, so this was a failed trade posted to the forum. The reason, in case some of you weren't here yesterday, the reason I'm showing you that these were posted to the forum is just because a lot of annoying people, when I do a webinar, they want to question everything and they'll say, oh, how do we know you really took those trades? How do we know that those trades are real? And all that kind of stuff. And to kind of get around that, I've decided to only show trades where, you know, there's proof that they've been posted to the forum, they've been taken, etc. So I want to show you trades that everyone can tell for sure that they actually have been posted before that time. So that's why we're looking at trades that have been posted to the forum. And yeah, just... okay, so this one. So this, like I said, was a trade posted to the forum. It was posted by Tom. A lot of people entered this trade, ended up being a failed trade. So let's look at why this was a failed trade. Or not so much as why this was a failed trade. Let's look at how it would have been traded, why it triggered, and kind of where it failed. So with this trade here, right. So let's zoom in a tiny bit. Damn it. I put down my screen resolution to 720p when I would do one of these webinars. That way everyone watching it in 720p gets like a crisper image. But it also makes it very hard to work with this limited space as opposed to like normal 180p. All right, so this is the trade setup basically. And again, this is one we discussed yesterday. Yesterday we discussed why this trade was entered. Today we're going to look at how it was traded. So sellers had control of price. Sellers had control of price. This candle is very strong. I mean, when you look at a candle this strong and sellers have such strong control of price, and then they immediately stall with the next candle, indecision forms on this area of support, that immediately tells you this is a strong area of support. You know, sellers were very strong and they stalled on top of this area of support. It's a strong area of support. There's very likely to be buyers here and the buyers are likely to be quite strong. So that's why this trade was entered. Looked like a very good trade. So the entry was placed just above the high of the indecision candle. In this case, it could have went pretty much right above it because the high was several pips away from the open of the next candle. The stop loss would have been placed kind of like just below the low of the indecision candle, so roughly here, and the target would have been placed roughly here. Now, this is an interesting example also because you're going to say, hey Nick, why would the target be here as opposed to here at the next at the resistance area? Now, the target would have been here because of something that I call minor support resistance. Now, minor support resistance is something that I try not to worry about too much anymore. For the most part, I kind of sort of ignore minor support resistance. But when I can place my target, when it's safe to place my target before a minor support resistance area, I'd much rather do that because then I don't have to contend with that minor support resistance area. So the minor support resistance area is here. And what is a minor support resistance area? It's just an area in which price has bounced from recently. That's not necessarily a very strong bounce, and it's not necessarily a major support resistance area like the one we have placed. So when you look to the left, you see price has bounced away here. Price has clearly bounced away. So when I look at that and I say, well, I can easily hit a 1 to 2 risk to reward ratio. Even better, I can hit a 1 to 2.5 risk to reward ratio on this trade. And that's before it even hits minor support resistance. It just makes sense to say, screw it, I'm going to set my target here, as opposed to trying to contend with that minor support resistance area. So as opposed to trying to hope that buyers are strong enough to break through this minor support resistance area. So yeah, like I said, as opposed to trying to hope that buyers are strong enough to break through it and hit the resistance area, it's if you've met your target before minor support resistance, you may as well take your target at minor support resistance. If you're around to watch the trade as it hits the target, you might decide to keep it open and to monitor it and see how it reacts at the minor support resistance. Because if it ignores it and pushes straight through, and you're there to watch it, then you might be able to hold that trade. It's up to you how you manage that. But it looks like a pretty decent minor support resistance area, so it was worth setting the target around about here. Now, what happened to this trade? None of that matters because it failed. We got a second indecision candle, which happens sometimes. Sometimes you get a second indecision candle. And in the end, it just kind of like stalled and the stop loss was hit with this candle. It was clear that this was still a strong support area because price stayed on top of this support area for quite some time. It just kept trying to push up and trying to push up, but it couldn't really do that. The sellers overall were too strong, and they continued and they pushed price down, and now it's stalling again at this support area here. I think we looked at this yesterday actually. Looks like this might end up being a potential trade setup on the 12-hour. See how price is stalling here? That itself is indecision, but I don't know. I'm not too sure. This is not a great indecision candle. It's more of a bearish candle. On the 6-hour, this might be a trade, but nah, I'm gonna keep an eye on this on the 12-hour and see how it forms because it's part of a major downtrend, which is something else that I would consider. So when you're looking at a setup and it's part of a major downtrend, which this is. Oh, look at it on the daily. Look at that. That looks good. I might trade this on the daily. That looks beautiful on the daily. Anyway, when a trade's part of a major downtrend, it's not something that keeps me out of a trade, but it's definitely something I would consider as a possible problem for that trade. So it's part of a major downtrend right now. I'm trading reversals. So, I have to accept that if price is trending down, sometimes I'm going to be trading against a major trend. And most times that's fine. Most times, because, when price moves down as part of a trend, it doesn't just move down straight. It usually retraces a little bit on its way down. So I'm able to make profit on those retraces on the way down. And sometimes I might catch the end of the trend. And instead of just making profit on the slight retrace, I'm able to ride it up a lot longer and make more profit. So yeah, this looks like a pretty good trade setup actually. I'm going to wait for this on the daily. I want to see how this closes on the daily. If this candle closes as it's closing now, so if this candle closes like this, then the candle is, what? It's 8 now. So yeah, just not too long away from closing. So if this candle closes as it is now, this is how I would look at this setup. This is great because I can show you an actual active, it's not an active setup yet because the candle hasn't closed. I want it to close, but I can show you like something that looks like it's going to close as indecision and how I would trade it. Let's see if we get a good risk to reward ratio. Yeah, we do. Good risk to reward ratio, 2.34. Yeah, I'm not really too bothered. NFP is something I'm concerned about, but if I can enter this trade a good 12 hours before NFP, if I can enter tonight, maybe 10 hours before NFP, I'm still willing to jump into the trade. And I'll explain why in a second. But let's look at this setup and see why I think this is a good potential setup. So risk to reward ratio right away is 2.34. That's pretty good. That's really good. That's a nice risk to reward ratio. So this trade looks like it might be worth it. Indecision candle is nice and strong. Sellers pushed into this area. It's stalling on an area of resistance. This is, I think, an area of resistance we possibly placed in the first webinar in this series. Or maybe not. I'm not sure if we done Euro AUD in that webinar. But this looks like a nice strong area of resistance. It has some strong history. As we can see, this area of resistance, bam, came down and reversed. So it has a strong recent bounce. So this all looks good. This looks like a pretty decent trade setup. And yeah, someone noted tomorrow's NFP. So let me tell you my thinking of NFP. So NFP, it's coming tomorrow. The thing is about news releases, and this is something that is going to scare a lot of people, but in my opinion, price action has the ability, not the ability, that sounds weird. Price action sometimes predicts the news release. And why does it do that? Why is price action predicting the news release? It's because, okay, when you look at hedge funds and central banks and all these big boys, the people who are moving price, the big boys, the people who are trading millions, billions, these people have access to data that we couldn't even imagine. They have analyst teams, which they pay millions to, news analysts who tell them exactly what they think reports are going to come out as. They know roughly what NFP is going to come out as tomorrow. They already know. I mean, they're not always going to be 100% right, but they have a very good idea of what NFP is going to come out as tomorrow. So when you see indecision forming right before NFP, what does that tell you? That tells you that central banks, hedge funds, they very likely might be positioning themselves to take profit from the NFP report. So, they're getting ready to position themselves. They're taking trades so they can be in the market, so they can capitalize from the move by that NFP report. So there's a strong chance that if this closes as indecision and price moves up, that NFP is just going to help that trade along and move it up. Now, ideally, I don't want to still be in this trade. If I were to enter this trade, I don't want to still be in for the NFP report. I'd rather be out by that time. But, if the trade is like, let's say I enter this trade. Let's say in theory, it closes exactly as it is. So my entry would be roughly up here at the 149.40. 149.30, right? My stop loss would be roughly here at the 148.00, and my target would be roughly here. All right, so let's say I enter this trade. Let's say that in the next 10 hours before NFP, price pushes up to here. So price gets to here, and it's, almost at my target. My target's here. What do? I would say, okay, NFP is coming out. Worst case scenario, NFP is going to reverse price, 100 pips, something like that. But it's likely not going to have a huge effect on Euro AUD. So it might reverse price and it might come back to my entry. And in that case, I'll probably just jump out. I'll probably jump out near my entry and I will have lost nothing on this trade. It's highly unlikely that NFP is going to reverse price so much that it pushes all the way down to my stop loss. But if it does, who cares? It's just one lost trade. I'm going to win at least 60% of my trades this year based on all my statistics from the last few years. But my goal is to win at least 70%. So one loss out of the 200 trades I'm going to take this year is nothing. It's insignificant. So if NFP does happen to turn around this trade after it's already in profit, then yeah, okay, I'll take the loss and I won't cry about it. But if it's that much in profit, it's very unlikely that NFP is going to turn price around that much and actually hit my stop loss. Now, if I were to enter this trade and by the time NFP comes around, it had pushed up only to here. All right, so it's only up like 30 pips, let's say. I don't know exactly how much that would be, but let's just say, we'll just measure it real quick. So let's say, that's 30 pips. It was exactly 30 pips. Cool. So let's say price has only pushed up around about 30 pips. Then I would say, okay, we're getting close to NFP. Price has only pushed up 30 pips. I'm just gonna take those 30 pips and just get out of this trade because I don't want to sit through the NFP report if price is only here. But if I'm able to get all the way up to here by that time, then I'll just hold the trade and I'll keep it open. If price has moved down and it's near my stop loss by the time NFP comes out, then I'll just close out. So that's how I would handle this trade if I do take it. Mike, why not move stop loss up? I mean, I could do that too, but you can potentially get slipped if the NFP pushes down really fast. So I'd rather just take those 30 pips profit. But it depends, This is all because this trade isn't even open yet, and I'm not in the situation. I'm just talking theoretically what my plan would be to do. But when I'm in the actual situation, I might decide to treat it differently. This is what I think I will treat the trade as if it pushes up, etc. But when it actually happens, maybe I will just move my stop loss up. But more likely than not, I would just close out with the 30 pips because I wouldn't want to get slipped if price pushes down too fast. But we have to see. We have to see what happens. First, this has to close. So this has to close. Then buyers need to push up and they need to prove they're in control of price by pushing up and making a new high. And we're not quite sure if that's going to happen. So we don't really know how to handle this at all. We need to wait for the close because the close is important and the close is what dictates whether, it's what dictates whether there's price has actually stalled here. By the time this closes in a few hours, price could have just started moving down again and then it won't be a trade. But yeah, this is something I'm going to keep an eye on. I'm going to move it to the top of my list. Hi Nick, does the wick of the indecision candle matter? Looks like I missed a few questions. Okay, yeah. Let me answer this question from Abdul. If I've missed out on any of your questions, please just retype them. It's hard to talk and show examples while people are typing questions and answer them at the same time. Okay, so first question from Abdul. Hi Nick, does the wick of the indecision candle matter? I mean, if the wick is lower, if your question is not... All right, I mean that if the lower wick is higher than the upper in the case of a short trade, should I worry about the wick in this case? I think I understand what you're saying, and you shouldn't really worry about something like that. As long as your risk to reward ratio is okay and your stop loss is beyond that wick, then it's completely fine. When you say minor support resistance, do you give them importance while being in a trade? Because recently I took a trade using your strategy and it didn't reach its target. And it just reversed at the minor support resistance. How do you overcome this issue? If there's a lot of minor support resistance. Well, let me look for an example. See if we can find a good example to illustrate this. No, I can't really find an example to kind of to base my response on. Okay, so I'll just have to speak. So minor support resistance is definitely a concern, but for the most part, I ignore minor support resistance. If minor support resistance is immediately within the 1-to-1 area of my trade, then I just tend to ignore it. Minor support resistance is not a major concern. It's a minor concern because it's minor support resistance. Basically, what I do with my trades, right? When I'm looking at a potential trade, so let's use the Euro AUD as an example because there's a potential trade forming right here. When I look at a potential trade, what I do is I kind of tally up the negatives of that trade. Now this trade, if it closes like it does, what are the negatives? The negatives are NFP report coming up. Like I said, I'm not that concerned about NFP because when I look at this, I could say, this indecision is forming because the big boys are positioning themselves for NFP. So NFP is not a huge concern with this trade, but it is a somewhat of a concern because it could potentially turn this trade around. Like I explained the multiple scenarios, so it is a little bit of a concern. When I look to the left, I see that price stalled around here. On its way up, see, through here. Price stalled around here. Price kind of got stuck around here for a bit. So that's a little bit concerning because, what happens when price pushes up through here? Is it going to have that same kind of movement? Is it just going to get stuck and just move around here? So this would be kind of like a case of minor support resistance. So that's two things that are potentially wrong with this trade. But those two things, they're just two things and they're not enough to keep me out of the trade. If there were three things that I would be concerned about, if it had three strikes against it, then I might say, okay, I'm not willing to take this trade. But yeah, minor support resistance. It's just one strike on the list, let's say. Have I thought about creating my own hedge fund? Yes, I am actually doing that. In the process of. Because I started thinking trading my own money is great, but if I could trade hundreds of millions of someone else's money, that would also be awesome. So yeah, process of creating a hedge fund, applying my strategy to hedge fund trading. It's a long-term process. I need traders also. I can't do it all myself. So that's part of the reason why I have the advanced course. I like the idea of training people and creating, a lot of good traders who trade the way I do and who can potentially maybe join me in a hedge fund someday. We're at the questions and answers part, by the way. I think we've gone through plenty of examples. So I'm just gonna keep answering questions. How long did it take for you to create your strategy since you started at a young age, and when did you become profitable? That's from Jan Z. Okay, so I started at about 18 trading Forex. Stock trading, I wasn't trading price action or this style at all. I would say that it took me about 1 to 2 years to develop what the basics of a strategy, it's not the same as it is now. I mean, the core of it is the same, but it has changed a lot over the past 10 years. So I would say from when I was about 20, I was profitable. It took me about 2 years of messing about and trying to figure things out. But do keep in mind that I was living with my parents and I had access to my parents' money. Not that my parents were rich, but they helped fund my first trading account. So my meals were cooked for me. My laundry was done for me. I could just sit around at the computer all day just staring at charts and figuring things out. So, it was a lot easier for me than it is for an adult who, has a normal job and has other commitments to kind of like, but then again, I started from scratch. I started with nothing. I started where I had to create my entire strategy. So, it wouldn't be that hard for everyone. But yeah, it took me 2 years of just messing around a lot. If I miss your question, by the way, just keep pasting it in there. Don't spam it in. Just paste it in every now and then, because there's a lot of questions. So I'm just going to go through them slowly. How long on average do your trades run to hit 1 to 2, 1 to 2.5 profit? Well, that question's easily answered by looking at some previous trade examples. So this 8, 16, 24, 32 hours roughly. This one, that one wasn't a trade. Never mind. This one, 6, 12, 18, 24, 32, 30? 30. Yeah. Damn, that's some bad math there. So 30, 32 hours. 8, 16, 24, 32. So that's roughly 32. Maybe verging on 40 hours. 8, 16, 24. So you're seeing a theme here, right? They all end up being, if they're traded on 8 6-hour chart, they end up being around about 30 hours or so. Some run for longer. Some are open for almost a whole week. If price is slowing down. The daily chart trades, they tend to run for quite some time longer. I don't think I've taken a daily chart trade recently, so I don't have a good example to show you. I'm sorry, I don't have a good example to show you on the daily chart, but you're looking about a trade lasting anywhere between 24 to 48 hours. That would be kind of like an average guesstimate for a trade on the 6 to 8 hour charts. 4-hour charts tend to not last as long. Obviously, it's a smaller time frame. So yeah, hopefully that answers your question. Indecision on top of your resistance area. That's not a question, Fabrizio. That's a statement. If two indecision candles form at resistance with complete opposite wick. No, everyone's typing. I can't see the question. Damn it. Retype that question. Which time frame would we use to actually place support resistance that you have permanently on your charts? We discussed that in the first webinar in this series. When we place support resistance areas, I'm using the 12-hour and the daily to place support resistance areas. 12-hour and daily, both those time frames. I'd really be looking forward to your continuation strategy. I really wanted you to explain it in brief. Is it possible for you to do it right now? No, it's kind of not possible. I can't describe the whole strategy in 10 minutes. And also continuation strategy is something that I'm just starting to do this year again after a long time of not doing it. So it's not something that I would be confident in sharing in a public webinar because it's not something that I've actively traded this year. So if I've not taken like 10, 20 trades with this strategy, I don't want to really share it because, I don't have enough recent experience trading it. And it would be very dishonest to say, hey guys, this is a good strategy that works, if I don't have recent experience in trading it. I wanted to share some basic concepts of how price action can be used for continuations in this webinar series. And I wanted to explain how people can start looking at price action as a way to trade both reversals and continuations. But we never got to do that really. And we don't really have time to do that now. But the actual trading side of things, the actual entering of continuation trades, that's not something I would be willing to discuss in this webinar, or, you know. How do you overcome fear of losing money? Well, one important thing is to trade with a 1 to 2 risk reward ratio. That's a good start, because then every time you win, you've covered 2 losses. So that's a good start. But fear of losing money is, it's a very complex subject, actually. It's a psychological subject, and there are a lot of things you can do to cover that fear. And it's not something that we can get into right now, but like I've said earlier, I am going to be doing a podcast series in about 2 weeks. I'm going to launch the first one. It's a completely free series. It's a podcast series on trading psychology, and that, believe it or not, is going to be in one of the first podcasts, I believe, or maybe the second, I'm not sure. But we're going to be talking about fear of losing, because it is very important. So keep an eye out for that, or an ear out, because it's a podcast. That is a stupid joke. I'm sorry. Nick, is the 8-hour chart good enough to plot support resistance areas on if you do not have access to 12-hour charts? I would say plot them on the daily. I would say that the daily would be better than the 8-hour. I used to do them on the 8-hour, but I find that these days with current price action, placing support resistance on the 8-hour, they're a bit too closely spaced together, whereas the daily, they're a bit further apart, so it gives you a little bit more room to breathe. The 8-hour is going to give you too many of the kind of like minor support resistance areas. Too many of those small bounces are going to look significant, whereas the daily filters out those small bounces, so I would go with the daily. Oh, wow. Okay, Gary, this is going to be a hard question to answer, because I'm a slow read. Wait, I'm going to take a screenshot of the question. That way I can read it slowly, because if I don't, other people are going to type, and okay, that's good. Sorry if you already answered any of these. I prepared them during the presentation. Do you use stop orders for entries? Sometimes, not that often. What platform are you using? For trading, I'm using MT5 for actually entering trades. For charting, I'm using TradingView, which is this thing here. Is there a way to get the odd time frames on MT4? Not a reliable way, no. I would suggest stop trading with MT4 because it's ancient technology. It's 10 years old. In the world of software, 10 years old is way too old. MT4 is not a good charting platform anymore. It was good 10 years ago, but today it's not good anymore. I would suggest you find a new charting platform. MT4 is okay for trading still. It has some limitations as far as trading goes, but there's plugins that cover that. But for the charting side of things, MT4 sucks, I'm sorry to say. What is your favorite time frame to trade? My favorite time frame right now, it kind of changes throughout the year depending on where I'm getting most of my trades. But I would say my favorite time frame right now has to be the 6-hour and the 12-hour. Those 2 time frames are awesome, and I'm really loving them, and they're giving a lot of really nice trades. And the third one would be the 8-hour. 8-hour has been a consistent, like, top 3 favorite of mine for 4 years now, I believe. Does your support resistance strategy work for futures as well? That is a good question. I've actually tried it on futures, and I know a few of my students who traded on futures, and it works well on futures. As far as I would assume, it's going to work well in every market, because price action is just price. It's just how the price moves and how people are reacting to price movements. So I would assume that it works in all markets, but I can't really vouch for it in all markets, but I can vouch for it in the futures market specifically, because I've traded futures with it myself. So yeah, futures specifically, I would say yes. Other markets, I would say probably, but I'm not 100%. I can't recommend it because I haven't done it. I don't like recommending stuff I haven't done and I don't have experience with. I feel it's kind of dishonest to say, yeah, it works in stocks when I've not really traded stocks with this strategy. So yeah, futures, yeah. How many different currency pairs do you look at? Generally, all the currency pairs listed here. That's what I look at. That's a bad tool for that. All the currency pairs listed here. Is the tool to measure risk-reward ratios available to us? It's available to anyone who's using TradingView. It's just a TradingView platform, so it's just a tool on there. As far as I know, it's not available on other platforms. It might be, though. I don't know every platform in the world. Are you planning a webinar on continuation trades? I am planning a webinar on discussing the concept of continuation trades, but not actually how to enter them, because like I said earlier, I haven't actually entered continuation trades this year yet. It's something new that I'm looking to do, and I can't discuss stuff that I haven't had at least a little bit of experience in trading in the recent past. For consideration, when you open the advanced course, what are the advantages? I don't really want to talk about the advanced course here. Okay, back to everyone else's questions. How much money would you recommend to start live trading with? It's a tough question. All right, let's say pounds, because it's the currency I'm most familiar with. If you are looking to just start to understand the strategy and start to like get the basics of it. So if you wanted to trade my strategy and you wanted to start to understand it and start to get the basics, you could start with as little as £100, £200. It would be more beneficial to start with something like 500, 600. That way you have a little bit more flexibility on how you take your targets. But that would be just like, you know, what you would start with for testing purposes. When you actually want to start full-time trading, you're going to need several thousand, in my opinion, to actually make a go of it. We're talking 5,000 plus would be a good thing. But I mean, you can technically build that up from a small account of, let's say, 1,000, but it's going to take time. The smaller your account, obviously, the longer it takes to grow. So for the testing side of things and for just the learning side, I think live accounts are better than demo accounts, and I would suggest a live account with somewhere in the vicinity of £300, £400, just as a kind of like, this is me learning to trade kind of thing. Did you make a custom spreadsheet journal to record your trades, or do you recommend the trading journal? I made a custom one. It's very simple. I just made a few a few headings and wrote in there. Why do sellers and buyers continue to push price all the way to the next support resistance area? Because they're strong and they break through a support resistance area? Is there something like, do you have more to that question, John? I'm not sure I'm not sure if there's more to that question, or if you're just asking why does price continue through an area. Abdul is asking, if two indecision candles form at an area of resistance and one candle has a long upper wick, and so I think there's a decent example here. No, there isn't. What pair were we looking at that had two indecision candles? New Zealand USD maybe? All right, I'm just gonna, oh no, we got kind of an example. No, we don't. It's, okay, I'm just going to have to make one up with the drawing tools. It's the best I can do. All right, so we have this indecision candle here. Let's imagine that... this kind of sucks. It's hard to answer your question. Basically, what Abdul is asking is if there's an indecision candle and the first candle has a long upper wick and the second candle has a long lower wick, how do you handle that? We've already answered this question. Your stop loss would go above the upper wick of the first indecision candle, and your entry would go below the lower wick of the second indecision candle. That's how you would handle the trade. Or if it's vice versa, if the first candle has a long lower wick, close enough. First candle has a long lower wick, second candle has the big upper wick. You would enter here and you would put your stop loss here. Of course, in this example, that would not be a viable trade, but I'm just saying, like, if that were the case and you wanted to enter the trade, you would use the most recent low and the most recent high. What's your TradingView account so you can follow my trading plans? I've not really been posting ideas to TradingView. I think it's something I'm going to start, but it's just forexfornoobs.com, I believe. How do I show my thing on TradingView? It's not something I've really used before. I'm pretty sure it's just Forex for Noobs or forexfornoobs.com. I don't know how to show it. I'm sorry. But yeah, it's either Forex for Noobs or forexfornoobs.com. I think my name on TradingView is forexfornoobs.com. Yeah, see forexfornoobs.com. I have 239 followers? What? Oh, no, my post just got moderated because I said test. Oops. Oh, well. I never posted in that chat. So... Do you believe in the concept of the more common the strategy, the more likely it's going to have a low success rate? No. Not at all. That makes no sense. Do you live off your Forex income comfortably, or do you have a second source of income other than the advanced course? Just curious. Yeah, I live off mostly my trading income, and obviously Forex for Noobs brings in some income, extra income, which is nice. But other than that, I don't have any other source of income. I had a few other businesses, but I just couldn't be bothered with them, and I don't need the money, so I just kind of like stopped doing that. I was getting into 3D printing. It's just because I like having businesses and I like making money, but I don't know. I just realized, right, when I was doing this 3D printing stuff that I was getting into, I realized that I didn't want to spend my whole life working. And, you know, right now I make more than enough money to live comfortably, very comfortably, and go on holiday whenever I want and stuff like that. So I just thought, you know, if I can just say to my girlfriend, hey, let's go to France tomorrow, and hop on the Eurostar and go to France, you know, having that kind of freedom is a lot better than having double the money I make and not having the freedom to do stuff like that. I'm rambling a bit. This is way off subject, but your question was, do I have other sources of income? No, I don't. It's Forex for Noobs is my only other source of income that other than trading Forex. Do I leave my trades over weekends? Yeah, now I do. I didn't used to last year, but I've started doing that. Uh, we're not really here to talk about the scalping strategy, so your question's very weak, not weak, sorry, vague. I meant to say your question's very vague. Like, how much should you target per week? That's a personal thing. And do you withdraw profit or compound it? Again, that's a personal thing. It depends on your account size and your goals. What I would do with my account is not what anyone else should do with their account, or maybe it is, but how you handle your money in your trading account is up to you, and it's all personal. Nick, how long would you wait if your trade is stalling for more than an hour or so? Meaning not, if a trade is stalling, I tend to just keep it open unless it's been stalling for, like, let's say I'm on an 8-hour chart, right? I take a trade on an 8-hour chart, I take a short. Actually, here's a good example. Here's a pretty good example. This was not a trade, but let's just pretend that it was for the sake of answering this question. So we got preceding trend heading into an area of support. Let's pretend this candle's lower wick wasn't as large. So let's pretend this was a trade. If price started pushing up, right, like it did here, and then it stalled on this 8-hour chart for this many candles, 8, 16, 24, it stalled for 32 hours just sitting here. I would probably just close out the trade. I'd probably just say, oh, screw it. I can't be bothered staying in this trade any longer. Buyers have had 32 hours to move up, or even 24 hours, and they haven't made that move. So I'm just gonna close out with what profit I can get right now. Sometimes I'll do that. I do close trades out early if they're not doing what I want them to do. I do give my trades a fair chance to work out though. So if they're stalling, it's not a 1-hour thing. It's something like I wait 8, 16, 24 hours. If an indecision candle is forming very near to a support resistance area, but not in the area, should we trade in that case? Suppose an indecision candle with a higher upper wick is forming just above the SR area. In this case, how should the trade be handled? That is a very good question. To answer that, let's... we've been using ADJPY a lot. We'll stick with ADJPY. It's just ADJPY has had such a nice little run here that it's kind of it's easy to use as an example. What's happening here? Okay. So basically, let's say this resistance area was a bit lower. Let's just say for argument's sake it was a bit lower. That would probably keep me out of the trade. My concern with this would be, let's say price pushes up through this resistance area and then this indecision candle formed here. My concern would be that when sellers try to break through this resistance area, this support area, they might bounce away and continue up. So this would turn into a continuation instead. So, when I place my support resistance areas, I don't bother too much with accuracy. They're not always incredibly accurate. I place them as best I can, but if price moves too far above the general area where I see resistance, so if price moves too far up above it and indecision forms, I won't take the trade because there's always a risk that it's going to bounce away. But if it forms below it, then I'm not too bothered. So in this case, where was this before I moved it? It was roughly up here, I think. Yeah, so this trade here, this formed below it. In that case, it's not a problem. In that case, it just becomes a question of risk to reward ratio. If your risk to reward ratio dictates that this trade is worth getting in, then it's worth getting in. Fabrizio, how far away from the area bubble would you consider an indecision candle to be before you consider a trade opportunity? Or are you worried about it countering the closest SR? I think we just answered that roughly. If it's too far above it, so if the indecision candle forms cleanly above it, so like it would here, if the resistance was here and the indecision candle forms here where this one is, then I probably wouldn't enter the trade. But if it's below it, like that, like it actually was, I think, I can't remember where that resistance area was, but I think it was roughly there, then it would be worth entering the trade, because here, all that concerns you is the risk reward ratio okay on this trade? And the risk to reward ratio is okay on this trade. Yeah, the risk reward ratio is okay on this trade, as we've looked at several times. I don't know what market scope is. I've got no clue what it is, so I don't think anything about it. At what point do I move my stop loss to break even? Well, I don't. I just target 1 to 2. I don't move my stop loss to break even anymore. I used to, but I don't anymore. How many trades do I take on average in a month? I would say this year, about 10. I used to take less trades, but the changes I've made to my trading strategy allow for a lot more trading opportunities. So I'm looking at taking anywhere between 2 to 3 trades per week. So I would say top end would be about 12, but 10 would be more realistic. After entering a trade and price is moving a long time near my entry, in that case, should I exit or wait for a stop loss? It's, again, that's a bit of a vague question, like, and it's very dependent on the situation. Questions like that are tough to answer because it depends on the situation, and it depends on the trade, and it depends on a lot of factors. And, each trade is unique, and you would treat each trade differently. If I were forced to answer, I would say that, if you're on like a 6-hour chart and after you enter the trade, price is stalled for 24 hours, 4 candles, it hasn't even moved down into profit at all, I would probably exit. But, I would do analysis, and I would try and read the price action, and I would try to understand what price is doing. Do you believe risk-reward ratio is one of the most important considerations? Yeah, I mean, risk-reward ratio is vital. I mean, if you're good enough a trader to win 70% of your trades, which is quite tough, but if you're good enough to do that, then you don't need to have a risk-reward ratio of 1 to 2. But if you do, you're going to be a lot more profitable. So why not? It's important. Do I do any other strategies? I've already answered that question. The answer is no. I do my main strategy, I do scalping, and I'm looking at doing continuations, but no. When placing stop loss, do you take into account the spread? Yeah, of course. Spread's usually tiny though. I'm sorry guys, there's so many questions. I'm just trying to read everything. Follow me on TradingView. Yeah, I'll try. What broker do I recommend? I don't recommend brokers, I'm sorry. I don't like recommending brokers. How many pips on average do you make per month? Pips is a horrible metric for judging your profitability. I don't even bother to add up my pips because that's not how you see if you're a profitable trader. I have entered into gold using this strategy and I'm in a very, very good profitable situation right now. I don't attend many webinars, but this webinar proved profitable for me and it was surely worth attending. Thanks looking forward to such seminars. All right, cool. Thank you. And good luck with your position. I don't trade gold. I don't trade commodities. I find them a bit, I don't know, scary would be the right word, I guess. Like I just find that they don't move the way I like. So I've just stayed away from commodities. But yeah, man, I mean, if you've taken a good trade, nice, good for you. Good work. All right, see you later, Joe. Nick, why do you do this for us for free? I don't know. I just kind of like... There's a business side to it too, you know. This does promote my site and it does get the word out and the website does make me money. So there is a business side to it. And I'm sure most people think that it's all about the business side of things. But to be honest, when I first started Forex for Noobs, it was a free site. And I only really started making money from Forex for Noobs when I realized there was huge potential for that. I just kind of like having... I just like doing webinars and I like doing this stuff. I like teaching people how to trade Forex. There is there is a business side to it. There is also that side I was talking about earlier where I do plan to one day open my own hedge fund and I do want to train people to be good traders and to be profitable traders for the possibility of joining me in a hedge fund business. So there is that side of things that, might happen one day. So I like training people for that reason, but I also just like talking about Forex and stuff like that. Why is there a limit then? A limit to what, John? I've stopped taking... Jonas is asking, Nick, do you ever take out half your trade position at 1-to-1, risk to reward, or at minor support resistance, or do you always close it out as 1? I pretty much always close it out at 1-to-2. I don't take half my profits anymore. I used to, but I don't. Anyway, guys, I had an appointment. Well, not an appointment. To be completely honest, I'm going to play Armor Free with friends. We have a weekly Armor Free. Armor Free is a PC game for those who don't know. A weekly Armor Free match, and I was supposed to be there an hour and 20 minutes ago. So this webinar has run for 2 hours and 19 minutes, which was 50 minutes longer than planned. So yeah, a lot longer than planned. So I am going to call an end to this webinar. I'm going to go play some Armor if my friends are still playing, hopefully. I hope you guys enjoyed this webinar. I hope it was useful. If I've missed any of your questions, and I know it's very likely that I've missed questions because I know there's so many questions going up and I just don't have an opportunity to answer them all. If I have missed any of your questions, feel free to email me. My email is nickfx, nickfx at forexfornoobs.com. Wait, I'm going to type it into the chat too. nickfx at forexfornoobs.com. Feel free to email me with your questions. Feel free to add me on Skype. My Skype is Nick Bencino as one word, I believe, something like that. Nick Bencino is one word. Let me let me type this all on the screen. Wait 1 sec. Should be able to see this. nickbencino@gmail.com and Nick Bencino. It's a bit small, but I can't make it bigger. So feel free to add me to Skype and all that stuff. And if you have any extra questions, I'll be happy to answer them. And I'll be happy to chat with you about trading and help you out. So, yeah. I hope you enjoyed the webinar. Please tell me best broker for volume. I've got no idea what you mean by that. Best broker for volume. Yeah, I honestly, man, Imran, I got no idea what you mean. Feel free to add me to Skype or email me and, explain your question a little further so I better understand it. So, yeah, I'm gonna call an end to this webinar, and I'll catch you guys. I'll see you guys around the site, and I'll see you guys on Skype, and I'll see you guys via email, I guess, for anyone who has any extra questions. So, yeah, see you guys later.